Thank you very much for having me here. I come to Montreal quite a bit. In fact, my trade desk here has called me an honorary Montrealer. I'm not sure exactly what that means, except if I go out late the night before, I still wake up for work the next day, so maybe that has something to do with that. This time of year, I like to come to Montreal because I like to make fun of your weather. And usually the May long weekend is, it can be hit or miss here, but I got to tell you, I was fishing in the interior of BC on Saturday, and woke up to 5 inches of snow. And so I think risk of forest fires this year might be a little bit lower than last year, so that's one good thing. The presentation I'm going to give to you, I talked with Sven about what we might talk about, and what I decided to do is give a similar presentation that I'd give to institutional investors or board of directors for companies, and it's going to focus on 4 things. Obviously got to talk about the price of lumber a little bit. We're going to talk about what that means for profitability for these companies. Talk a little bit about what companies are spending all this money on. And then we're going to finish with the valuation, what this implies for what these stocks might be worth. So, kicking right in. That's boring. I have to spend 1 minute on Raymond James because they paid for me to come here. And so Raymond James is it's a pretty big broker in the US. In Canada, we're smaller. We're considered an independent broker in Canada. We have about a 5% market share in the trade in Canada of all the stocks. But in this sector, we tend to outperform. We have about a 50% of the blocks, and we like to beat up on the Canadian banks here. Don't get to say that very often, but in this sector, we get to do that. Here we go. So in 2010, I don't know if you guys remember 2009, the price of lumber, what did it get down to? It was like $140 or something like that. Bad old days. In 2010, we published this note, and we saw a few things happening. And we were tagged with calling for the lumber super cycle, and it was fun because we became kind of known for that. And so the 3 things associated with the lumber super cycle back then, and first of all, better late than never. It took a while. Wasn't exactly sure how long those dead trees are going to last in BC. But there's 3 things to the super cycle. There's the emergence of a new market off the West Coast with Asia, primarily China. We had a normalization of US housing starts, and David did a good job of enunciating that. And then that ugly critter on the top, that is a mountain pine beetle. It's the size of the end of your pencil, piece of just the very end, but that had a very big impact in British Columbia. So starting with Asia, these are, I think they're Canadian. Yeah, these are Canadian, but primarily this would be from BC. Lumber flowing to China. So you can see, how do I do the laser pointer? There we go. So it went from almost nothing, and then it ramped up to pretty high levels right around the time, and this was important because the US housing market wasn't very strong at that time. And I mentioned the mountain pine beetle. So the mountain pine beetle ended up killing 70% of the mature pine trees in BC, which make up about 40% of the trees. Thank you. And this worked out pretty well because we could still make lumber out of this wood, but it was not very good. It's a lot of low-grade lumber. Well, you can't build a house from the really bad stuff, but you can ship it to China for concrete forming. So this was a very, very important dynamic in the industry. And we go there. David talked a lot about US housing starts. I'm not going to belabor those points, but there's a couple things I want to focus on here. These are, so we have a very strong analyst in the US. His name is Buck Horn. And I used to have to forecast my own housing starts before he came along, but he's proved to be very good. If you sign up to be with a Raymond James broker, you can get his research. And he comes out with a big book every quarter. It was interesting working with Buck because in this times, when housing really crashed, I'd talk to Buck and say, okay, so, it's going to be a good year for housing. And he was like, no, it's going to be bad. And next year, so Buck, because I need housing to work for lumber to work, right? And so next year, hey Buck, you good? No. And so he was the biggest bear for the longest time. His estimates were low on the street, and he was right. And it was a long time before we saw some. I don't know if you probably can't see that, and I agree with you, David. I hate it when people put these things up. I'll have to talk to my associate. But Buck and David talked about this, and I remember when COVID hit. You think about housing. It was the fourth quarter of 2019. Things started looking pretty good, and then first quarter even better. Lumber started taking off, and then the shutdowns hit, and everything went to zero. Everyone panicked. In May, Buck lives in Florida, and in May he started driving around and going to look at open houses, and he was surprised by how much traffic he was seeing. And I didn't believe him. I thought Buck was, I know marijuana is not legal in the U.S., but I was very surprised that he was as bullish as he was, and it took me until July to believe him, but he was right. And again, this is not a perma-bull. Buck will call it as he sees it. And he became very bullish on housing in 2020 and remains very bullish today. And so his forecast, he just took them down a little bit, but they remain quite elevated. David covered some of this stuff, and you look at the biggest concern I get from institutional investors is this 30-rate mortgage rate obviously spiking up very high. And but this is the yes. And I guess the other offsetting thing, though, is you see median family income going up quite high. So a lot of the affordability measures will just look at housing costs and financing costs. Buck also takes into account median family income, which has been growing quite rapidly. And one of the other key things he focuses on is household formation, and we saw the demographic chart that David put up. I think this is a big deal because you see the households that are reaching homeowning age really spiking at this point. One other item that Buck talks about in the morning call that I put a lot of faith into is internal migration in the U.S. So people moving from Orange County in California to Austin, Texas to be with Joe Rogan. And I listen to podcasts sometimes, but so I think those, because those houses simply don't exist in those other areas. So you're seeing a lot of building going on in areas where where there's houses are more affordable and they don't exist. So, our take on housing. Oh, this is another interesting one. I like this one. Starts versus completions. So David talked also about the supply chain issues, and you can see housing starts running at levels far above completions. To me, this is one of the key issues right now that, if we can get those, supply chain issues worked out and we get those completions running more in line with the starts, I think we're going to be in good shape as well. I like this chart a lot because, people focus on housing a lot, but repair and reno is actually a bigger consumer of lumber. And, if you're stuck in your house because of financing or for other reasons, one of the things you might do is fix up your house. And if we look at the average age of housing stock in the U.S. right now, it's never been older. So, these two things can kind of be a bit of an offset, I think. To the extent we're not seeing the single family grow as much, repair and reno can hang in there as well. So, looking at a little bit at the curtailments we've seen. So these were largely a function of the mountain pine beetle. So the mountain pine beetle swept through BC in like the year 2000. And then the question became, and it swept through and killed the trees pretty quick. But then the question became, what is the shelf life of the dead timber? So we had vast tracts of standing dead pine trees. And this is why in 2010 I was a bit early, because these trees were still available to make lumber out of for quite some time. So one way to think about British Columbia over this period, it was a giant salvage operation. So the chief forester increased the harvest by about 30-40% to take advantage of this dead pine. And as long as the log didn't fall over, you're good. You can still make lumber out of it. And actually, it was pretty impressive to see the technology that was put into place, like if you ever have a chance to go through West Fraser's Quesnel mill, the fact that you see these rat shit logs come in, and the fact you can still make lumber out of it is pretty impressive. And this occurred for a long time. So it wasn't until 2018 that the chief forester reduced the harvest in BC by about 30%, basically reversing the uplift that was previous. And then at that point, it was a bit of a standoff. It's like, you should close your mill. And it's like, no, you close your mill. Because the reality was there wasn't enough logs for the installed trees, the installed lumber capacity. And so what happened is you saw stumpage prices go up very high because over competition. And then eventually you saw lumber come down in 2019, and then the mills start closing. And it was about almost 2.5 billion board feet closed in BC that year, which is around 20% of BC, about 4 or 5% of North America. Sorry, wrong button. This is interesting because these are Canadian lumber shipments, and the orange line is U.S. housing starts. So, we're starting to get back. Oh, damn. There we go. We're starting to get back to, levels of housing starts that are quite high, but you'll note that we used to produce 35 billion board feet of lumber in Canada, and now it's less than 25 billion board feet. This is, one of the things I'm most interested in. This speaks to, we don't need those very, very high levels of housing starts to still have a tight market in lumber. And then the hits just keep coming for BC. This is part of the reasons why I'm interested in Eastern Canada more, because we've seen log costs go up by about 80% in BC over the last 6 years, and it's not going to get better. And we're going to see more mills close in BC. I think we see another 1.5 billion board feet permanently close in BC over the next 12 months. And one of the things we don't have in BC is a supportive government. So in November, the government came out with something called the Old Growth Plan for BC. So essentially, BC had protected 75% of old growth, defined as forest stands older than 300 years. They took that to 97%. So it's big. If it's enough wood for over 3 billion board feet of wood that's not available. That's the equivalent in lumber production. It's not gone for good necessarily. If forest companies make a deal with the First Nations or Indigenous band or a JV, access can still be had. But this is going to result in more, and it's not just this. We have the old growth deferment, we have caribou management policy in the northeast part of BC, and we have some of the apportionments from the previous fall down that were announced now that's actually being apportioned through the various licensees. All this is going to mean less wood available in BC. It's going to mean higher costs of timber. And so, one way that I look at the price of lumber going forward, either these mills close, which obviously helps, reduce supply, helps the price of lumber, or they don't close, and you have over-competition within BC, and that stumpage rate keeps going up. And obviously that's going to put a floor into the price of lumber as well. We had an atmospheric river in BC in December. We used to call those pineapple expresses, now atmospheric river. It rained a lot, and it washed out some rail lines and highways. It's deeper than that, though. I think there's structural issues right now with respect to rail car availability out west. There's not enough cars, and most importantly, labor is challenged as well. I spoke at the NALA conference a couple weeks ago, and there's a transportation expert on the panel. And he talks about things like there's 10% absenteeism with conductors. Like, it's a tough place to work right now. And it's almost like trying to get employment for a U.S. South mill. You get 100 applicants, you got to throw out a bunch for drug testing and criminal record checks, and then you end up with 3 or 4, and then there's high turnover. It's the same thing with the rails, and it's tough. This, we've built a bunch of inventory in BC over the over the last, say, 3 quarters. I don't think it's gonna, like in 2018, we saw the same story, right? Interest rates went up. There was a lot of wood on the ground in BC, and it all found its way to the market by 3rd quarter. This isn't gonna be a 3rd quarter event. That wood is gonna be slow to come into market. Couple that the fact that, Canfor is running 4 days a week, West Fraser 3 days a week. So I don't think we see this big wall of wood this time. I think it's gonna be more measured. I don't have a slide on it, but we should talk a little bit about Europe. There is issues with respect to the Ukraine war and sanctions on Russia. Russia does produce around 12% of the world's softwood. I was talking to a producer in Europe recently, actually when I was fishing. I think we're just starting to see the effects of that now. There's Baltic sawmills that rely on Russian logs to produce lumber, and they're just now starting to run out of wood. I know, Canfor just reported in the 1st quarter, around 20% of their wood with their European operations, Vita, found its way to North America. By the 2nd quarter, it's half of that. And I think that's gonna continue to go down. European lumber prices are up around 30%. Canfor's earnings are actually gonna be very good in the 2nd quarter because of that. They're not gonna feel the decline in the US South. But that's another bullish indicator on lumber right now. So this is quite shocking for someone from the West Coast, but BC used to be a pretty good place to do business. Cash cost below $200. Now it's at least $600 if you include lumber duties. So that's, BC is around 15% of North America, and it's a tough place to do business. Makes it pretty good for smart. I think Rick Doman, I think I saw you buying some assets out here. That's smart. You saw Interfor. Is that Rick? All right, there he is. Nice. Well done. You see Interfor buying Ecom Timber. Again, it just makes a lot of sense. Quarterly lumber pricing. Lumber used to trade between, as you all know, like 300 and 450 or so. 10-year average is 425. Very different recently, and you experienced this. I don't have to belabor that. Guess what that means? A lot of free cash flow. So these are my forecasts for the public companies. West Fraser, about $3 billion in free cash flow this year. These are free cash flow yields, over 50% for Interfor. These are, insane numbers. You don't normally see this in public markets. Well, when you make a lot of money, your debt disappears quickly. So these are net debt, and they're all negative. Stock like Canfor, they're going to have $1.2 billion of cash on the balance sheet by end of this quarter. It's about $12 a share on a stock that's trading at $24. I mean, the valuation stuff we'll get to, but David spent some time on the softwood lumber dispute, and I hope he's right in terms of the when this money could start flowing back. But there's a lot of cash on deposit. West Fraser with over $7 a share. These are on the right are the percent of the market cap. So look at Western Forest. 20% of their market cap is sitting in deposit with the U.S. Department of Commerce. Almost the same for Interfor that they bought Ecom. Canfor about the same as well. It's a lot less for West Fraser given their assets. It's only 5%, but still, these are material amounts of cash on deposit. So what are these companies going to do with this money? Here's various paybacks measured in years. You can spend money on your mills, you can buy back shares, you can build a new mill, or you can do some M&A. And those are the various paybacks, assuming $500 lumber. I surveyed investors. I said, what would you like? These are public investors that buy stocks of the public companies. What would you like to see these companies do? Share buybacks, number one by far. Regular fixed dividend, variable dividend, special dividend. Asked another way, like if you want to rank order what the investors would like these companies to do, reinvest in existing mills, pay down debt, share buybacks, shareholder dividends, and then M&A. No one wants greenfields. Don't build mills. So here's a chart that shows how much money has been devoted to share buybacks over the past, I think we did it last 12 months, but it's material, you know. Interfor has bought and canceled 20% of their float in the last 18 months. West Fraser just announced a second substantial issuer bid. If they're successful, they're going to have bought and retired 45% of their float in the last 2 years. So even if lumber goes down in price next year, earnings are going to go down, but earnings per share are not necessarily at all. This is phenomenal, and investors are just, you know, this is what makes an institutional investor happy. What else have they been doing? They've been buying mills. So here's a chart of the US South. I think the green is West Fraser. They left the charge in 2001, but you can see that a lot of this money, and I think one of the most interesting things, a lot of this was refunds from the softwood lumber dispute last time, plowed back into buying US South assets. Super, super good. There's been a lot of M&A lately, as you can imagine. Some of this so first of all, people don't want to buy anything in BC. You want to buy it outside of BC. So there's been some acquisitions in Alberta, acquisitions in Eastern Canada. I mentioned Ecom and Interfor. And then Europe's been interesting for some producers, namely Canfor. In terms of greenfield, that's been concentrated in the US South. Some observers are worried about this. They think that this is going to kill the lumber market. I don't think so. I look over the last 10 years, it's been less than 1 billion board feet has come on each year. It's difficult. Labor shortages, you still got to make those deals, got to get rid of your chips. Equipment manufacturers are backed up. I think that it's going to be measured, the expansion in the US South. So getting in terms of the stocks, these are stock tips now, and they're worth what you paid for them today, so don't come back to me. But there's strong seasonality in lumber, as you all know. There's also a high correlation pre-COVID with lumber stock prices and the price of lumber, cash price of lumber, not futures. And you can see that they tend to peak. And so basically you want to buy the stocks at Halloween, and you want to sell them at Super Bowl. Just remember that. Buy at Halloween, sell at Super Bowl. It's pretty easy. You make about 25% just doing that. And notice the correlation. So one of these is lumber prices. One is the index of share prices. What are the stocks discounting today? And this is where things get super interesting. So these are lumber prices that are implied in the share price of the stocks today. So look at Canfor. It's saying that lumber should be trading at $200. Canfor by far is the cheapest lumber stock right now. But even West Fraser, it's discounting a $400 lumber price today if we ignore free cash flow. So this is just the straight up. So $400 lumber, is that reasonable? You saw that cash costs for BC are $600 today. So the stock market is saying that lumber is going to be $200 below cash costs for an entire year. This doesn't seem reasonable to me. If we look at lumber prices over the past 10, 5, so I was asked by an investor, like, what is trend pricing? And I'm like, I don't know. I don't even know what that means. It's just some average, right? So here's the 10-year average for lumber prices. Damn it. Here. So 10-year average, around 4.25 for Western SPF. That's what the markets are willing to pay for a lumber stock. They're saying, okay, you know what? I can chin up to the 10-year average lumber price. And that's what the stocks have been discounting for the past 2 years, no matter what. Now, lumber can be $1,700. The market is willing to pay $425 for West Fraser shares, which I find interesting. So for value in the stocks, I settled on using the 5-year average. I don't believe it. Again, with BC cash costs over $600, how could lumber be $525 for an entire year? Don't believe it. But, you know, the 3-year average, $575, the 2-year average, $860, the 1-year average, $1,200. What does that imply then if that actually comes out to be true? A lot. So this is the last slide, and this is kind of the one I like the best. So he said, if we put in the 10-year average for commodity prices, and multiples, by the way, there's about 36% upside in the public lumber stocks. We're using the 5-year average, which is 525 Western SPF. 525 Western SPF, and I get 70% upside in the lumber stocks. I don't think it's going to be 525. 3-year average, you get 122 upside, and if you use the 2 average, it's almost 300% upside in the stock. So don't forget about seasonality. If the price of lumber is coming down like it is today, the stocks won't go up regardless on valuation. But if we see lumber prices find a level, and maybe it's in the third quarter, maybe it's around Halloween, I can't tell you exactly when, but I think that would be a good time to add to your positions. That's all I had. Thank you.
Very much. Oops, my mic. Thank you so much, Daryl. May I ask you a question in French?
No.
No. Okay.
Sorry. No.
You don't say. Oh, you're good then. You're good then. Do you have questions in the room?
And I'm not singing either.
No. En français, on dit on va vous épargner. Well, I don't know how to translate that, but you're safe. Any question in the room at this moment? I'll look at
Shy crowd.
the app at the same time. Sven, will you have a question on your side?
I have a question, yeah. Go ahead.
I don't have any on the
Okay.
platform. It's you, if you want.
Okay, in
if
that
you want.
case, I would have
Sure,
a
go ahead.
starter. Yeah, for sure. How about new listings of lumber companies? Is there an opening for that? Do you see new companies or other companies that could become listed companies?
I think so, yes. There are a number of IPO candidates that I've met with in the past little while. There's definitely investor interest, and I think the challenge is valuation for a lot of it. When you see the stocks, the public companies trading at such a big discount, I think private companies have sometimes a challenge to chin up to those valuations to make it all work for all those shareholders involved, the private shareholders.
Okay. David, you got a question?
Oh, yeah. Whoa, this is a mic.
Do you want to stand up?
Don't worry, I'm not singing. No, I just had a quick question. You had an awesome slide on what companies could do with the cash flow plotted against how long that investment takes to kind of sink. The greenfield was, I think, like 3 to 6 years, something around then. But what about, what's the appetite and how much room is there for brownfield projects in the U.S.? Is that part of the calculation, or?
It's a good question. So the U.S. South has a lot of timber, and even now, in a lot of areas in the South, the trees are still growing more quickly than they're being cut down. So there's huge room for, you would think, that log costs are going to be low for a long time, so why not build a mill? The challenge, there's many challenges. Equipment is the first one. I mentioned labor. It's very challenging to get labor. Even West Fraser is experiencing 25% turnover at their mills. Same thing with Interfor. So very challenging to retain or even attract labor. Because labor is so challenging, the key performance metrics that companies rely on are often challenged. So you might, like I was chatting with Ian Fillinger from Interfor, who spent a lot of time in the South, and he's like, you basically got to cut your KPIs in half. If you think you're going to make this much, you're actually going to make this much. If you think you can do it in 2 years, it's going to take you 4 years. Like it's more challenged than it appears on paper. And so a lot of these greenfields have been, a lot have been announced and then sometimes, canceled. Canfor is doing one right now. I understand there's quite a bit of government incentive behind it. But that leaves brownfields. So brownfields, a lot easier. Equipment, some of it can be recycled. You also likely have credit agreements already for your wood chips. Everyone knows you saw up a log, half is wood chips. You need a credit-worthy and freight-logical buyer of those wood chips. So if you have an existing mill that's usually in place, A lot of these brownfield projects, you're not making more lumber. You might just be using less logs to make the same amount of lumber and having better margins, better grade outturns, those kind of things. So I expect there's going to be a lot more of those. Interfor is just starting up one in Eatonton right now. Canfor just announced a $130 million US project at one of their mills. I think brownfields make a lot more sense relative to greenfield.
Our time is up, but we have 2 questions. So let me ask you, okay? And we'll finish on this. The first one is from Julie Gravel. Great presentation. You mentioned 600 MFBM capacity reduction in BC. Do you think that number could be higher?
I think the numbers might have got mixed up. Cash costs in BC are $600 US at the mill level right now. And I think the permanent shuts are going to be north of $1 billion. I think it's going to be between $1 and $2 billion permanent shuts in BC over the next, 12 to 18 months.
All right. And Steve White asked you, do you see more consolidation, acquisitions, and mergers in the industry in the next few years?
And the word yes. This money has to go somewhere, and there's lots of it, So West Fraser, I think they're going to have, my forecast right now is too conservative. We're using $600 lumber for the second half of 2022, which isn't going to happen. It's going to be higher than that. But even using 600, I have them leaving the year with over $3 billion of net cash. So if lumber's could be 4 or 5 billion, what did they do? They can't buy back all their shares. They bought about half in the last 2 years. That can't continue at that level. So I think M&A is going to continue. With these companies leaving BC and becoming more regionally diverse, it's really changed things from that front and on also other fronts. The downtime that these companies are taking in BC today, that wouldn't happen 5 years ago when they had high concentrations of their operations in BC. This regional diversity allows them to take the downtime in BC because they have, West Fraser has 80% of their sawmills outside of BC today. And the other problem with M&A is BC would not allow those combinations to occur. And so maybe you will see some of these other combinations occur. The BC assets would have to be sold differently. They could not, like West Fraser couldn't. Say West Fraser took a run at Interfor's 3 mills in BC would have to be sold. They could not be part of that deal. The BC government would not transfer those licenses. But with those regional diversity now, you can kind of work around that. So maybe there's some combination coming up.
Daryl, thank you very much for sharing your thoughts today with us. And I'll ask Monsieur Frédéric Bouchard from PwC to offer you a gift to thank you for your participation. Monsieur Daryl Swetlishoff.